Yo, hey man, say man, how was your day, man? It's favorite trader GDO coming out with another video, man. We about to go ahead and get on these charts, get into this lesson, man. I ain't about to waste y'all time because I don't want you wasting mine. Y'all want to learn how to trade? I'm about to teach you how to get paid. Oh, oh, yes, sir. Don't ask me why I'm whispering. Y'all know my baby sleep when I do this, man. Don't even play with me like that. You know what I'm saying? Y'all know what's going on. Y'all know how we get down. You feel me? Let's go ahead and talk about today. Well, as you can see, I took my trade around like 7:03. GDO, what happened to falling ruin? Shut up. I don't want to hear that. hey, opportunity call. Yes, sir. We took advantage of it. You feel me? So let's go ahead and get off into why I took this trade or exactly what I was looking at. Almost similar to the last two videos, and really it is the same trade, honestly. When we look at this price action, okay, when you come to the market, remember what you should do is look for your higher time frames, right? We're looking for draws of liquidity. What are the draws of liquidity? It's internals and external liquidities. What are internals? Internals are fair value gaps, inverted fair value gaps or gaps. Externals are your highs and lows of that time frame. Each time frame has two objectives: internal and external. Once one is satisfied, it's on to the next. All right. So let's talk about why I took the trade I did today. If we're looking at price action right now, we see that we have an external low. Well, let's start off right here. We had external low, external high, right? 12 o'clock broke that external high. All right. 11 o'clock was responsible for that buy leg breaking this high. Again, we cannot mark none of these as the high until this opposite candle comes, which is a sell candle in regards to us being in a buy leg. Okay, once that sell candle is solidifies this buy leg, we can then mark this as the 1 hour external high, 1 hour external low. Now, if you see, we crossed the external high at that time and then broke structure to the downside, and it gave us a pull down all the way down to this hour internal. You have an hour internal right here with a 4 hour internal also, and then you have a 1 hour internal right here. So again, if we're touching or satisfying the internal liquidity, what's next, guys? You can say either the similar internal liquidity or that external liquidity, okay? And that's what I was moving off of today when it came to my entries on my trade. As you can see, I was trying to see if price was gonna let me get this daily external and internal. It's in the same place. It happens like that sometimes. But this internal is old, right? But I was trying to see if price is gonna let me get to this draw of daily external, right? Or just simply this hour and 4 hour external high, right? So I thought initially that price was gonna come all the way down to the 4 hour, then we were gonna have a breaker structure to the upside, and then go get this 4 hour external, right? Internal, external, or internal, internal, right? Because if we come here and we catch a breaker structure, we can catch from this internal to this internal. And if price is doing what it's supposed to, and if price wants to go, because it's not our story, it's price's story. If price wants to go there, it'll take us from a deep 4 hour internal to the 4 hour external. All right. So once I seen that we were coming down, we make this big drop. Okay, we have a lower high, lower low, lower high. I'll just use this lower low. It's really this one, but I'll use this one, lower low. All right. Well, at around, I see now that I entered off the 1 minute. Not 7:02. I kind of wanted to enter, but you know how it is. Like it was like 3 seconds before that next minute candle closed, and it kind of dropped down, and then the next candle, of course, started rallying up. So I went ahead and entered at 7:03. Now again, when looking for buys, you need to be looking to the left to see what peaks of the mountain or what highs are you going to take out. So when I say peaks, when I say mountain, if you look right here at this breaker structure, you can see now for my visual learners, you ask yourself, what does that look like? It looks like a mountain that needs to be climbed. All right. So all these things that I'm mentioning are just simply confluences. We touched the hour internal, right? I'm now looking for price to go to the hour external. So breaker structure at 703, entered in my trade. You have this high, equal highs, highs, equal highs, damn near equal highs. And then we have the external high for the 1 hour. Now, I got about $660 off this because I was trading at $10 a point. That's 5 contracts for Mnq. All right. But the only reason I got out this trade is because this 15-minute, once price came in contact with this 15-minute internal, and I'll show you what that looks like. Once price came in contact with that 15-minute internal, it started moving really slow, which was showing me that, hey, we may not want to go past this right now. And as you can see, we're actually moving down as 9:30, as New York session is open, right? So I entered my trade at 703. I caught it from the hour internal in attempt to catch the hour external. But before we could get there, the 15-minute internal stopped us, all right? And I mean, that's kind of simple. That's what I do every day. That's kind of what trading is, just catching price from internals to externals. As you can see, we're going down. If I look right now, because I'm not trading anymore for the day, I already made $600. So if I go to the 4-hour time frame to just see where price is most likely going to go, if we get a breaker structure out of this internal to the upside, you can catch price to this internal, or even better, hold it until it touches the 4-hour external. And that's all price is doing, okay? Price is either going to go from internal to internal or internal to external. It's never external to external. And right now, we're coming in contact with this 4-hour internal. So if I go to a 1-minute time frame, let's see what we're looking like. We're either going to break to the downside again to get this 4-hour internal, which would give you about 80 points, or we're going to do a short-term BOS to the upside, go get this high, and then go back up to the 4-hour external, right? I've already made my money for the day, so I'm not really caring about what 930 does. And to be honest, I may start doing that, bro. It was really smooth. Of course, it was slow. We didn't have the momentum and the volume that 930 brings, but price action was very smooth. And it's always kind of been like that. 7 o'clock in the morning has always kind of been that time where NAS just do what it's supposed to. Of course, when 930 come in, you have all this volume and people trying to get in their trades and they just want to donate their money to the market. So fake outs, and then again, fake outs are just price action coming in contact with a high time frame internal after initial break of 930. You know what I'm saying? So that's what we did today. We caught our trade from the hour internal in attempt to get to the hour external. That's why you see these color coordinated boxes. I don't really have to stress or anything. Trading already brings a lot of confusion and anxiety. So when I first started off just being smart, I wanted to alleviate those anxieties as much as possible, right? So everything is color coordinated in turquoise 4-hour, red hour, green 2-hour, yellow 15-minute. So, and that's for if I see price in this area, right, and I catch a break of structure to the upside out of this area, I don't really have to question where I think price is probably going. Because one thing I know for sure is that it's going to go to the same draw liquidity, right? And that's the same time frame internal. You have a 4-hour internal right here. You have a 4-hour internal right there. So again, what are the internals? Internals are either gaps, inverted fair value gaps, or fair value gaps. What is a fair value gap? A fair value gap is a 3-candle pattern with an opening between the first and the third candle. So this right here is an inverted fair value gap. It is a internal, right? So 1, 2, 3, opening between the first and the third. No matter how you count it, no matter where you point your cursor on the chart, if you count 1, 2, 3, and there's no gaps and there's no opening between the first and the third, that's not a fair value gap. 1, 2, 3, there's an opening between the first and the third. You see right here? That's what allows you to create that box. Trading is nothing but boxes and lines. That's why it's only 10% of trading. 90% of it is psychological. So let's look at what price is trying to do right now. Before I went to the 4, it looked like it was trying to break to the downside. Nah, it's actually about to. You see how beautiful, trading could be. We have an external high now for the 1 minute. We have an external low for the 1 minute, and now it looks like price wants to break to the upside. And if it does that, then we could be looking for targeting this 4-hour internal again, or simply just holding off until we reach the 4-hour external that's up there. And again, internals, fair value gaps, inverted fair value gaps. Externals are your highs and lows. See how I marked out my high and low for my 1 minute? Each time frame has two objectives, internals and externals. You can find fair value gaps, and inverted fair value gaps on every time frame, and you can find highs and lows on every time frame in regard to breakup structures. All right. So today was a pretty much easy day, man. If I get in any more trades, I'll come back and make another video. But for right now, man, that's about it, bro. Really easy day. Taking advantage of the hour internal and external liquidity. Like I said, caught my breaker structure, contact with the 1 hour internal, reaction, which is your breaker structure. Execution, of course, is entering in the trade. So at 6:56, we came in contact with the hour internal. The reaction out of that internal, right? Breaker structure at 7:03, executed at 7:03, and I got out my trade with 66 points, which for me was $660, being that I was trading at 5 contracts, which is $10 a point. You know what I'm saying? That 15-minute, I guess, was strong enough to send us back down. And then at that time of looking at the 15-minute internal, I was wondering, okay, so if we touch the 15-minute internal and we're actually slowing down, because you can see right here, price tells you everything you need to know, right, about what it's wanting to do. Coming up to this 15-minute internal at 66 points, we have 15, 30. Bro, you almost got a damn near hour of price telling you that we don't want to go past this. So what I did is I went to the bottom to see what other internal liquidities could price be wanting to visit. Because again, price can go from internal to internal, external to internal, but never external to external. So if we're slowing down at the 15-minute internal, well, before the external, here's another 15-minute internal. And there's no point of me losing, being up 66 points and losing half of it just to see if this was going to hold up and keep us going to the upside. And again, if you pass $600 on the street and at Walmart, you're not going to just walk over. You're definitely going to bend down and pick that joke up. So stop playing with me. You feel me? So yeah, $660 a day, man. That's about it. If you guys want to learn how to trade like this, man, visit neverquitexceed.com. Become a profit ton. All links for the free Discord is in the description below. Make these videos every day. Talk in the Discord every day. If you want to just be around like-minded people, man, join up. Change your life. Hey, man. Say, man. I know you're having a good day, man. It's your favorite trader G to come out with another video. Yes, sir.